Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 5th of November 2007, and the S&P 500 finished with a loss of just over $1, or down about 0.7%. You can see intraday it came down and tagged that 200-day moving average and the support at 148 once again. But it was able to stabilize in that area and find somewhat of a bounce. You can also see that we have a green candle, which means that the close was higher than the open. And after 3 days of selling, or actually 2 days of selling, the market's maybe stabilizing in here a little bit as it attempted to on Friday we saw as well. So we did see on the shorter term time frame that we had these lower highs and lower lows, and I was thinking that the market really needed to get above 150, 140 was the area of resistance that we were looking at, and that's right around right there. So it's going to still need to be, I think, above that level. And again, the 5-day moving average right now is declining. That means that you have to expect some sell-offs in here, and these sell-offs are fortunately shallow, and they quickly bounce back. But we continue to see that the more times support is tested, just like we saw over here, the more times resistance is tested, the more likely it is that those levels will fail to hold. So you have to continue to be very cautious in here. We have a rising 50-day moving average. A lot of mixed messages basically continue to be sent our way from the market. You could look at this as an inverted head and shoulder, or a cup and handle, or you could call that a shoulder. But I think, again, that on the, I believe it was the 30-minute time frame, that we were looking at the potential for a maybe shoulder being built over here and then a further decline. But it seems as though, again, 148 is a pretty solid level for now. So that's going to have significant added importance going forward. I think that, what makes sense, maybe a continued bounce up towards that 50-day moving average before the next leg lower begins, maybe even up towards that 10-day moving average. But you still have to be very cautious in here right now. There's really, on the short-term time frames, we've got a lot of indecision in here, but that doesn't mean buy. It means that the market is kind of going sideways, and you have to be very aggressive and be trading on a very short-term horizon, I think. That's this morning you can see that the VWAP in the S&P 500 was acting as support numerous times. It broke in here, and then finally it made this series of lower highs, and then it broke down, made nice lower lows and lower highs. It broke past that level and recaptured that level towards the end of the day, but then closed basically right on it. That's a very important price point during the price of the day. In fact, I think it's the second most important price there is, and I'll tell you tomorrow what I think the most important price is. The semiconductors did come back down as expected and touch that 450 level once again. So that 450 level, I was saying last week, I thought that that the rally that was starting to develop in here, I thought that it would fail and that we would see a retest of 450. Well, we got that today. That, again, adds further significance to that level. But we do still have a series of lower highs and lower lows. And just because we're at this level that's been important in the past as support doesn't mean it will continue to hold. The path of least resistance is lower for the semiconductors. News and surprises tend to follow the direction of the trend. So continue to be very careful. Just because a market is what looks like to be a potential support does not mean it is a good place to buy it. To me, it's a horrible place to buy. Instead, you want to look to sell short failed rallies like we saw over here. Again, the area that I've been saying is the most critical and biggest reason for concern is this IWM, that is the Russell 2000. You can see it's still below the 50 and the 200-day moving averages. It did finish with a loss of about 1% today, down 90 cents. Tested that 78 level, and the level that we've been kind of focused on was $78.40. That's right here. It broke down, but only once it was extended. These breakdowns from an extended level typically suck in some less educated short sellers, and then you see a bounce, maybe back up towards 80 and a half again on that daily time frame. up near the 10 and 50-day moving averages, 10, 50, and 200-day moving averages. So that's going to continue to be a very important level, 80.5. So maybe we see a rally develop up towards there. What I think is the lower risk play right now is to look for a failure in that area and sell short, but only sell short when you see the failure actually developing, and then being aggressive about managing your positions. Today on my blog, and I know a lot of people watch these videos on YouTube and never visit my blog, there's a lot of good information there, and I'm going to force you to take a look at it right now. These are some posts I put on there today. Basically, early on, this is a 1-minute time frame. I was showing the cues and how this daily VWAP was acting as support. I thought a break below 54.05 could put further weakness on the market. A few minutes later, it did break below there. I sold short. In fact, what I did was I bought long the QID, but I based my decisions to buy that on the action in the Qs. I mistakenly said I'll lower the stop to 50 if 54 is taken out. 54 had already been taken out, and where I was going to put the stop, I'm sorry, I did have it at 54.20, which was just above these lower highs. If it broke back below and made a lower low right here, then I was going to lower the stop. So once I got in that trade, I was thinking, well, you know, looking at the daily time frame, it still is, like I've been mentioning, in an uptrend. And we've still got a rising 10, 20, and 50-day moving averages. So you can't lose sight of the fact that the overall trend is higher. At this point, I said it's hard to believe that even with 682 advancing stocks and 2,521 decliners, that I didn't expect the market to rally. But if I had a dollar for everything the market did something unexpected, basically that's what stops are for. Anyways, the stock dropped. I covered part of it and lowered the stop to break even. And you can see that I was posting pretty regular here. About 30 minutes later, it had another leg lower, so I covered a little bit more and lowered the stop to $53.97, which was just above this lower high. So I'm using the definition of trend, which is lower highs and lower lows. I lowered my stop once again once we had another leg lower and I had a definable lower high. So, and I said that I expect that this stop at 53.81 would be hit. So why not just cover my position? Because a lot of times the market does the unexpected. I already booked some profits in the trade, and I figured that let the market do its work for me. I'm going to take my opinion out of it. Maybe we'll get a huge washout. Who knows? But anyways, that stop did get hit right in here, as you can see, and the market rallied up. So, like I said, lower highs and lower lows is a definition of the downtrend. So if you're short, like I was in here, why would you continue to hold if the definition of that trend was invalidated? And I thought, well, maybe I'll look to re-enter. But what happened was, that was at 12:52 my time. I'm in Colorado, 1:05 local time. I started seeing this pattern develop, a potential inverted head and shoulders, and I was thinking, well, if it breaks past that level of resistance and overtakes the VWAP, well, then the market might get some movement higher, and in fact it did. And then I surmised, will this daily VWAP act, as a lot of times it does, as support? There's a lot of great things over here on the right-hand side of this blog too, not just under popular posts, but links and all that sort of thing. But anyway, so I said, will it act as support and get squeezed into the close? Well, that's exactly what happened. The inverted head and shoulders pattern I had pointed out did meet its objective at 54.20. And then I said that basically we've got a 5-day moving average at 54.30, so take a look at that as well. By the way, if you're doing any holiday shopping, be sure to do it off my blog if you're going to Amazon, because I get paid a little bit for that. So let's go back to the charts now. Let's go back and take a look at the NASDAQ 100, because you can see it still holds this rising 20-day moving average. And this news and headlines and stuff brings a lot of emotion to the market, but you have to remain objective and look at the markets based on what are people doing with their money. We do still see lower highs and lower lows, and we do see that this has a slight downward slope to the 5-day moving average. We have support down in here. So a lot of mixed messages still, but I think you just got to generally be very careful in this environment.